Hello folks, welcome to TheoTrade. My name is Doc Severson and this is the Theo Night Report for a Thursday, October 27th. Okay, we've had a little fireworks after the bell. This is Google, and you can see that Google just announced earnings and we went from about 817 up to 849. So just about a 4% pop in price on the initial announcement of earnings, which were just unbelievably huge for Google. About 20% revenue bump there. And I haven't read the report yet, so I don't know why, but apparently this is faded all the way back to 820. So it's given up all of that. Now, who knows what's going to happen tomorrow, overnight, as Google follows the sun and the different markets open up and close. And with tomorrow's cash session, we could see a lot of different reactions from it. But right now, we're just about flat for the evening. Now, on the other hand, Amazon actually had a pretty bad miss in terms of the bottom line earnings for this. So we went from 818, about the same number as Google, right, down to 745. So it's almost like those two went in opposite directions. And so we're watching the NASDAQ futures at the same time. And that was actually fairly flat because they both went in opposite directions by about the same amount. And Amazon right now is trying to claw back from the depths right now. And initially was down about 9%, probably about 4% down right now. So who knows what's going to happen. Probably by the time we wake up tomorrow morning, we're going to be right back to 820 again. Now, keep in mind that both of these stocks, Google and Amazon, were pretty much coming from just about all-time highs as far as the price. And when I see something like that occurring, as well as the NASDAQ overall being just about all-time highs, this is where we have to kind of get an understanding about the health of the rest of the market. And this is where I turn to something like this, which is in this case, the NDX A50R. What I'm looking for here is the NASDAQ 100% of stocks above their 50-day moving average. Generally, if the stock is above a 50-day moving average, it's generally thought to be in a pretty healthy uptrend. And right now, what we're seeing is only 43% of the NASDAQ 100, the strongest stocks in the NASDAQ, are above the 50-day moving average. That's not good. So this reminds me a lot of the summer of 2015, right before the big fall, where we had similar things going on, where we had all-time highs in the price, but a declining number of stocks in the S&P or the NASDAQ that were hitting all-time highs as well. In fact, we saw this bearish divergence happening at the same time. So if I go over to the NASDAQ composite chart here, you can see this. I mean, we're basically at all-time highs here. And think about this. When you've only got 43% of stocks, and if we want to, we can go to the NDX just to make sure that there's no difference here. So NDX, and essentially we're sitting there at all-time highs as well too on the NDX, right? So no real difference here. And think about that, all-time highs, but only 43% of the members of the NDX, so the largest 100 of the NASDAQ composite, are above their 50-day moving average. So there's a fair amount of risk right now where we have everything being propped up by only, apparently, just a few very, very large, highly performing stocks, such as the ones that we showed with Amazon and Google. So what this means is that we have the NASDAQ running kind of a high wire act right now, and one slip, and we're going to see another event similar to what we saw here in 2015. All it takes is one catalyst that's not currently priced into the market to cause something like that. And we all know that over the next 30 days, we could have just about anything showing up to provide that risk. Something else that is a concern right now is actually the Russell 2000 chart. So these are the Russell 2000 is the 2000 small cap stocks that we have. And what we've seen is a couple of technical failures here. So first of all, we have a trend line failure over here on the daily chart, where if we connect these lows together, this was holding until a couple of days ago, and then this is fallen. So anytime you see rising trend lines being broken to the downside, this is a very normal thing, but it can be an early warning that something's about to happen. So that's the first failure, technically. The second failure, technically, is this support level here at 1200. This was holding as support really throughout the year after the Brexit low. So the Brexit low came along, pushed everything higher in the short covering, and we've stayed above 1200 since early July. So early July, 1, 2, 3 tests of support, and now it's broken through. And the trend line is broken through as well too. So double failure on that. Now I would expect to see that this price level here at about 1150 to 1160 operate as support in the short term. As you can see also, the weekly chart is still in a primary uptrend here. And so just pulling back like this is not a downtrend. What's going to happen for this to kick into a downtrend is a lower high setting up and then a subsequent lower low like that. So we're still pretty far away from that occurring, but that doesn't mean that we can't get a little bit of volatility in here and a little bit of support test at lower levels in the short term. So here we have the Russell basically leading the major indices to the downside. And that's a bit of a canary in the coal mine right now, because we use that analogy because miners used to use canaries. They would carry canaries in a little cage around them. And if they would keel over from the odorless gas that cannot be smelled or seen, then the miners would know to get out of there. And so the Russell's kind of that same type of indicator right now, because fund managers know that these are fairly illiquid stocks, and that if they start to really pump volume into them in terms of selling volume, that they will move their own stock against their position. They don't want to do that. So they want to sell into liquid conditions when somebody's buying that. So right now it appears that they're trying to tiptoe out the back door right now on some of these small cap, high growth stocks. So how do we trade this market in the near term? Well, the one thing that we've seen, regardless of whether we're watching the Russell or if we look over here at the S&P, is that highs are not being bought, but the dips are. So the new highs are not being bought. We didn't buy new highs all the way through 2015 and parts of 2016. We did not buy new highs, but the dips are being bought. So there's enough Fed liquidity out there in whatever manner for people to buy the dips, but nobody wants to buy the highs. So even after the Brexit, when the price got pushed up here, nobody was buying the highs, but the dips are being bought. So until that changes, until that market character changes, we're going to be doing exactly the same thing. We're going to be looking for dips to buy or to sell into if we want to be selling puts against that stock at value prices, which is hard to find at today's prices. Or we're going to be selling into the highs when they are made. And finally, for tomorrow, what we're going to be having tomorrow morning at 8:30 Eastern, 7:30 Central Time is the GDP report. What we're expecting to see is 2.5% growth. This is the first reading on the third quarter of 2016. So this will continue to get revised through the rest of this quarter, right? But we're expecting 2.5%. And the previous read on this, so for second quarter, was 1.4%. So once again, we're in a position where we have to filter everything through the Fed, right? If we end up with a weak number that's well below the 2.5% expected number, is that good or bad? If it's low, what that means is perhaps we're going to have the Fed on hold. Certainly November, I think that's a given regardless of what happens. But then it starts to bring into question as to whether they do hike in December, which right now is sitting at about a 67% probability. On the other hand, if we do have a larger number that comes in above 2.5%, does that accelerate and potentially start to bake in a potential November rate hike? Again, I think it's still very unlikely, especially 1 week before the election, but you'll start to see the probability rise. And certainly the probability will rise for a December rate hike. Okay, interesting times, and I think we're right on the cusp of some volatility finally hitting this market after being basically asleep for the last 3-4 months. Thanks for listening, folks. We'll see you this weekend in the TheoTrade Weekend Report. Take care.